Alright guys, welcome back. Patrick here. In this video we are going to touch the sensitive topic of margin. This is very difficult right now. I know a lot of us are facing a lot of pain in the market, but Pumu, a member of Patreon, asked me, Patrick, are you going to be using margin to buy stocks? And the answer is yes, absolutely. I will go all in on margin to buy stocks in the future, but of course there are many layers to that answer, right? And that's why I wanted to make a video about it. I know a lot of you might be facing margin calls right now. Just remember that the famous expression by Warren Buffett, when there is blood in the streets is when you should be buying. But he also has another expression that says that the market can stay irrational longer than you can stay solvent. And right now in a lot of cases, some of the stocks that are high quality are not only at 52-week lows, but in some cases at all-time lows. So how do you actually navigate this? How do you avoid margin calls? That's all I want us to cover in this video. I'll show you what my strategy is and how I'm avoiding, getting a margin call. So currently the market is set up for a big rebound, or at least some stocks are. I know this is a little bit controversial, but it is a great time to actually purchase shares of stocks that you've been looking at for a long time, or actually dollar cost average down. So you have to ask yourself, why is this market actually going down? Is it because your companies are doing poorly? Are there existential threats to these companies? Or is it just market forces that are making the price go down? If you think about March 2020, when the pandemic was just starting and you had some companies actually the businesses shutting down, that is an existential threat. In those cases, yeah, it makes absolutely a lot of sense for the share price to totally crash and burn, right? If the companies are going to go bankrupt. Now, though, we are in a very different situation. These companies are thriving. I have absolutely no doubt about that 2020, the consumer is very strong, and a lot of our companies are going to do very well. They're going to progress. The revenues and profits are going to be up, right? So what is actually making the share prices go down, the market crash? It is fear of what the Fed is going to be doing to combat inflation. The narrative has shifted a lot over the past couple of months. So inflation has been around for quite a while now. The supply chain issues, we've been talking about this for over a year now. So everyone was saying, hey, the Fed's going to need to do something, right? The CPI keeps coming in hot. We're going to probably see them tapering their bond purchases. Then they're going to raise rates 3 times in 2022, raise rates 3 times in 2023. And then after that, the rates are going to be 1.5. The companies can absorb that since the economy is going to be hot. Everything's going to be fine. However, you have to remember that fear compounds on itself. Fear brings more fear. People are actually behaving based on what they expect is going to happen, which is often much worse than reality. In reality, the only thing that the Fed has said so far is that they are going to monitor the numbers. Yes, they did retire the transitory aspect, but they're going to be monitoring the numbers and they will react accordingly to actually combat inflation. So if we see inflection in the CPI data in February or in March, in April, right, at some point in 2022, that will totally change their plans. So it is very possible that the fear, what is actually being priced into the market right now, is actually worse than reality, worse than what is really going to happen. So what that means is that there is currently an overcorrection, right? So we can all agree on the fact that there are a lot of companies that were really stretched in their valuation in 2021. If you think of SoFi at $24, that's too high, not realistic. Palantir at $28, that's too high, it's not realistic. Same for PayPal over $300. I would not recommend anyone buy it at that price back then, right? So that doesn't mean that those companies aren't good. I think that they are great and they will continue to do very well. They're going to make a lot of progress in 2022, but the price was simply stretched for those companies. However, you have that correction that didn't just bring them back to fair market value. Now, in some cases, we are at the point where they are becoming oversold, undervalued. And right now, that's what we're seeing. We are seeing a lot of stocks reach 52-week lows, or in some cases, even all-time lows. And that causes a lot of irrationality in the market. The goal is always to buy low and sell high. But what do you do when the market keeps beating you down and your shares are going down more and more? Well, either of two things. Either one, you're going to feel like, hey, I have to sell now and raise cash so that I can, protect my portfolio because the stock's going to go even lower. Or number two, if you're facing a margin call, then you're forced to liquidate at a bad price. All of those options actually put more selling pressure on the market. So no matter what happens, right, until there's like an outside force, outside catalyst to break the cycle, this is going to continue for quite a while now. But that doesn't mean that we're not in oversold, undervalued territory at this point, and that there's a lot of good opportunities out there that you should be buying if you have the cash to do so. And that's why I will be willing to go into margin, but you have to be doing that like in a logical, rational way that's not going to be hurting myself. So what does this mean? Well, it means that in the past couple of weeks, I have started to selectively sell some positions that I wanted to keep, right? But I wanted to raise some cash, increase my padding in my margin account so that not only do I not face any margin call, but I have more of a purchasing power for when I do want to deploy this margin. So it is not time right now quite yet, right? So what I answered PewMew is that I will deploy actually margin to buy some stocks. But because we are at a point now where we're kind of running out of cash, we have to go into margin, and margin can be very, very dangerous. For those of you not as familiar with it, right, the way it works is that when the market goes up, you can use a lot of margin, you're doing good, it is a very, very good tool. But when the market goes down and your positions are down, especially like right now 50%, the percentage of margin that you have stays the same, right? So let's say that you had $20,000 in margin on a $100,000 account, but your account shrinks to 50. Well, you still have that 20%, $20,000 in margin. So now it's up to 40%, right? So even if you're using only 10, 20%, if the market is really, really like in a bad situation, like March 2020, or like it is now with stocks going down 10% per day, you run into an issue where like your margin can get out of control very, very quickly. And not only that, something that people don't necessarily know is that the brokerage can change your margin requirements anytime they want. Recently, E-Trade brought SoFi from 30% to 35%. Well, if they feel threatened, if they feel that people aren't going to like be able to sustain their account, they could anytime they want bring this up from 35% to 100%. So let's say that you were perfectly fine with your account. All of a sudden, if it goes from 35 to 100, well, you're going to be forced to either deposit more into your account, or they'll force you to liquidate your positions. All right, so all that to say that that's why I have been selling some stocks to give myself a bigger cushion. All right, so I'll give you an example: Triple Q, TQQQ. I wanted to buy it and then keep it for the next year or two, right, as tech stocks were going to recover. So I had bought some of it at 150. It went up to 170. Then we had the pullback over the past couple of days. Now it's at like 135. So I'm glad I actually sold it, and now I have more cash in my account to deploy. So what am I actually waiting for? Well, I'm waiting until we get what's called confirmation. Lately, we've had constant fake outs. You guys have noticed this, right? Even the Santa Claus rally was a fake out. It went up a little bit and then it went down even more after that. So before I go all in on margin, I have to wait until we know for sure that the market is rebounding. So for now, I am nibbling into my highest conviction stocks, which I don't mind if they go down a little bit because I'm going to dollar cost average down. But if I'm going to be investing $50,000 in one stock, I don't want to do that in one go right now under margin, because that $50,000 tomorrow can be worth 45, in 2 weeks it can be worth 40, and in 1 month, if everything goes wrong, can be down to 30. Now, if I'm under margin, and as we said, margin is really bad when the stock market goes down, that can cause me to go into like margin calls and everything. So that's why you want to wait until you do get a sustained rally. And the good thing about that, I know it sounds kind of weird, like phrasing it like that, but the stock prices are so low right now that the ramp like up, when it goes back up, it's going to be very, very easy to see, and it's going to take a while. So even if you miss a little bit of the rebound, even if you don't catch the low, you are still going to be able to benefit from that long ramp up. For example, PayPal's not going to go back up to $300 in 2 days or 3 days, right? It's going to take a while to do that. SoFi is not going to go back up to $24 instantly. It's going to take quite a while to do that. So when the market does start to rebound, and it is a lot safer to go into margin, that's when I will be willing to go all in under margin, right? And let's say that I missed the bottom, the low on SoFi, and I have to buy it on the way up at 14 or 15 again, but it goes to 20, 25, then no big problem, right? Going into margin is going to be well worth it, and it's going to be a lot safer than it would right now. Well, that's what I'm doing right now. I am trying to build cash, and so that increases my margin position so that I can go all in. Now, if you are facing a margin call right now, I would beg you, try to hang on as long as you humanly can, right? If I was desperate right now, I would go sell my used car. I can get a higher price now than I could like 4 years ago when I bought it. So I know not everyone can do that, right? But try to find some way to add to your account so that you're not being liquidated. Like selling SoFi at $12 doesn't really make sense. We can all say that, right? Eventually, it will correct back to more of a fair market value, and one of the catalysts that I see are the earnings. So that should actually bring some confidence back into these companies. They're not like going bankrupt anytime soon. In a lot of cases, the CEOs in the third quarter actually increased their guidance for these companies, right? And higher than what the analysts were projecting. So the earnings that are coming up in a lot of cases should be very positive and should bring that spark to kind of revive some of these companies that have been getting absolutely destroyed over the past couple of months. They are not going bankrupt. They are going to do very well in 2022 because the consumer is very strong in the US right now. So tomorrow, my video is going to be about the 3 best profitable companies that I'm investing in. That's one of the reasons why I'm raising cash. I'm nibbling on them. And when the market recovers, I want to go all in on them and buy as much as I can. I think you'll really enjoy that one, and it's going to help you set up your portfolio. All right, so see you guys tomorrow, and I hope you can get through this very tough time.